A $1,000 investment in Tesla in November 2011 would be worth just over $204,000 now, with the stock's price increasing from $5.74 to $1,229 over those 10 years. That's more than a 20,000% return. Welcome to Wealth Builder's Journey. Are you a beginner in investments? Then you need to know how to diversify your assets. Watch this video till end. We will discuss the popular asset classes. An asset class is a category of investment with particular risk and return characteristics. The following are some of the popular asset classes. Fixed income instruments, equity, real estate, commodities like precious metals, cryptocurrencies. What is a fixed income instrument? Let us see in detail. These are the investments with minimum risk. The invested principal will be always safe. However, the return will be fixed, which will be paid as interest to the investor. The following are the typical examples of fixed income instruments. Fixed deposit offered by the banks. Bonds offered by the governments. Bonds offered by government agencies. And bonds issued by corporates. Before moving to equities, I request you to subscribe our channel, if you have not yet done. Do let us know your thoughts in the below comment section. Now let's move on to next topic. Equities. Investing in equity is nothing but buying the stocks of publicly listed companies. Unlike fixed instrument, there is no guarantee for the capital invested in equity. However, on a long run, equities can give massive return. An investor requires knowledge, skills and patience to identify the investment opportunities in quality stocks. For example, a $1,000 investment in Tesla in November 2011 would be worth just over $204,000 now, with the stock's price increasing from $5.74 to $1,229 over those 10 years. That's more than a 20,000% return. That's cool. Let's talk about the next asset class, which is real estate. Real estate is nothing but buying and selling commercial or non-commercial properties. There are two income sources from real estate investments, namely, rental income, and capital appreciation. That is, a rise in the price of the invested property. Usually large capital is required for a real estate investment. Next asset class is commodity. Gold and silver are considered as most popular commodity investments. Over the previous 20 years, investments in these metals have generated an annual growth rate of around 8%. The last asset class, which we are going to discuss, is cryptocurrency. Yes. You heard it right. Cryptocurrency. But, first you need to accept the fact that cryptocurrency is not regulated by any government agency unlike stock market. So it is risky to invest in a highly volatile instrument like cryptocurrency. However, it is not wise to leave such a good opportunity to invest in a tech-driven asset, which gives massive return. Stay tuned till end of the video, where we will discuss the proportion of fund to be allocated in each asset class. Let's go back to cryptocurrency. Bitcoin is the first ever launched cryptocurrency. Back in 2010, the value of a single Bitcoin jumped from just a fraction of a penny to 8 cents. It has undergone several rallies and crashes since then. On November 5, 2021, Bitcoin reached an all-time high of $68,521. We have discussed all types of asset classes. Now it's time to talk about asset allocation. Preferably, investments should include a wide variety of asset classes. Risk and return go hand in hand. The greater the risk, the greater will be the reward. The smaller the risk, the lower will be the reward. If you want to safeguard your principal, investing in fixed income is a good option. Investing in equities is a fantastic alternative. It is known to beat inflation over long periods of time. Equity investments, on the other hand, can be risky. Real estate investing requires a huge capital NBSP, and cannot be performed with smaller amounts. Another drawback with real estate investment is liquidity. You can't purchase or sell anytime you want. You must always wait for the correct moment and the right customer. Although gold and silver are reasonably secure investments, the historical return on such assets has not been very attractive. Cryptocurrency gives you massive return. But it is highly risky and it is not regulated by the government. The ratio used to distribute assets across various asset classes is determined by the investor's risk appetite. For example, young investors may take higher risk compared to a retired person. Such investors may allocate 50% of investable amount in equity, 20% in precious metals, 15% in real estate, 10% in fixed instruments and 5% in cryptocurrency. Whereas, a retired person could keep maximum of his savings in fixed instruments. Now let me know in the comment box, what ratio do you suggest? To read more about investments and wealth creation, please visit our website, www.wealthbuildersjourney.com. Link is given in the description. That's all about various asset classes and asset allocation. Hope you enjoyed the video. Let's know your feedback in the comments. Please like the video, subscribe the channel and enable the bell icon. Thanks for watching. See you in another video. Happy investing.